of this thing, that is e-appeals and assessments, and also on RERA. So we are just planning in a grand way about the Golden National Conference also. So kindly block your dates on 2 to 5 of the September, and also 18th and 19th of this month for the Golden Jubilee celebrations. So that's all for the from now. Over to you, sir. Thank you.
Thank you so much. Let me quickly share my screen.
Yes, sir.
Can you give me the access to share the screen, sir?
Yes, please, sir. You can take this share screen button.
Yeah.
Press.
Okay. I hope screen is visible now. And I hope I am visible as well. Okay, so all of you are on mute. If there is anything, please drop a message in the chat window. I will definitely take those questions. And thank you so much, Chairman sir, for inviting me. It's again wonderful to share my thoughts on just to give an overview on what forensic audit is all about. So this concept of forensic audit, my dear friends, is gaining a lot of importance today. And the reason why I say it's gaining a lot of importance is the economic circumstances and the in and around surroundings are not giving the expected results. At the same time, the opportunities for doing frauds are also increasing. And this is coupled with some sort of a weakness in the system, some sort of a drawback into the system, and that is where forensic, frauds are being committed. And you would be surprised to know the number of frauds which are being reported day in and day out. If you visit the ACFA website, they have this disclosures where they speak about the quantum of frauds which are disclosed, and it runs into billions. Imagine even if 5% of that was invested in internal controls, there could be a lot more things which are actually lined up, correct? A lot more protection is possible. And therefore, with that as a background, with that as a thought process, let me quickly take you through an insight into forensic audit. And as usual, I have a few sections which I have to take you through. So let me quickly get into that particular process. So a quick introduction about me. I'm Narsimhan Langon, practicing chartered accountant. Technology is an area of specialization, and I've had a good amount of interest in the newer opportunities which keep on coming every day. A general disclaimer: the views are personal, nothing on my organization. So today's agenda, I'm going to keep it very simple. I thought I'll just take you through three things. What exactly is forensic audit? What is the concept of forensic audit? What are the various concepts involved when you're doing any sort of a forensic? And third is, how is it that data analytics can help you investigate a forensic audit? So I'm talking about that perspective. I'm not talking about how you should be doing a forensic audit report, investigation, what happens, etc. I'm not going to those nitty-gritties. The focus is more to tell you, hey, you know what, this exactly is forensic, and there are opportunities like this, you should be aware of. So with that as a context and background, let's probably quickly jump into what exactly is this forensic accounting and auditing. See, there is no concept called as a forensic accounting. Okay, the nomenclature has come over a point in time for sort of rediscovering, etc. Essentially, forensic is nothing but ensuring that you have sufficient evidence before the court of law. A very, very simple thing. Let's presume XYZ. Let's take a very, very simple example. Go back to, I think Krishna Janmashtami is coming up very soon. Jubilee from that particular era, let's bring in the concept. We all know that Krishna as a little boy was very mischievous, and he was popularly called as Venna Donga, or he used to always steal butter. And somehow his mother Yashoda used to catch hold of him, and sometimes he used to do mischief in and around, and somehow they used to catch hold of him. And when they brought him to in front of his mother and said, see, this is the person who did this mistake, Immediately Krishna used to say, I didn't do. Correct? And immediately mother used to also say that, no, you did it, etc. And they used to ask, what is the proof? So they used to say broken pots, they used to say butter, and they used to catch some butter which is all over his face. Correct? And that was presented as a case, and accordingly a punishment was given to that little boy. Now that is a concept which I'm sure most of you were able to visualize. Way back we looked into drama, serials, etc. Now, why did I bring this? Of course, I'm trying to link that incident in terms of what happens. There could be a fraud, there could be a misappropriation, there could be a trouble. Now, this event or this scenario, after it is taken place, let's presume there's a court case or there is an investigation which happens. Now, you as a professional give a report, and that report should justify or should give some sort of an examine, and it should give a statement such that such statement will be relied by the court. In simple language, forensic auditing, forensic investigation, however you can call it, is nothing but ensuring that you have evidence before the court of law so that you can prove certain facts which have taken place, which is historical in nature. Of course, you might say, no, sir, even statutory audit, etc. is there. We'll come back to the difference between statutory and forensic. We'll touch that later. The other thing, forensic audit can be conducted for various purposes. It could be for a particular claim. It could be for identifying the embezzlement which has taken place, for justifying the fraud, or merely to say, some fellow has confessed that he has done the fraud, but to quantify how much fraud has taken place. That is where this happens. Now, one must be wondering, sir, what is the role for professionals like us? See, generally, wherever fraud takes place, there is an involvement of money. There is some or other way involvement of money. When money is involved, my dear friends, whether it is good, bad, whatever it is, when there is an involvement of money, there is invariably accounting impact. And when there is an accounting impact, who better to investigate than professionals like us? Correct? So that was the entire thought process. And that is where the concept of forensic auditing became more and more relevant in today's context. Taking this conversation further, now what is it that I intend to achieve when I do a forensic audit? First, you want to use the forensic auditor's conclusion for the purpose of a settlement, claim, award, some judgment, because you justify that this is what is taken place. Second, you may also use forensic to prevent certain lapses which have taken place. An example could be, there is a loophole, you justify, you appoint a forensic auditor and please justify it. And once you justify, the management understands, yes, there is a fraud which is taking place, and it makes sense for me to go either in depth or change the procedure or introduce internal controls, etc., etc. The third, very important, is to restore public confidence. Many times what happens when a fraud has actually taken place, in the eyes of the law, obviously everything is gone. Now, you need to restore that confidence, and that is why professionals are appointed. Sometimes it is done in order to meet the corporate governance policy. Now, corporate governance policy could be, I might have some anti-fraud measures. Or if you look into the Companies Act, I think section 143, there's a specific clause which says that, certain times anti-fraud related measures, you'll have to look into it. Or you might do a forensic audit merely to identify if something went wrong. So you can conclude, because you are not able to identify, no major or substantial incorrect factual things have taken place. So everything is okay. Of course, you go a little more in depth. I've seen in certain cases when there is a suspicion, even in case of partnership firm, even in the case of, let's say, new investments being made, even in such cases, forensic auditors are appointed to go in depth and analyze what exactly went. And what a forensic auditor does is he gives you that additional comfort level that, they have gone beyond the traditional method of, sampling, the traditional method of audit, the traditional method of true and fair, etc. So you get some sort of a positive comfort that, hey, you know what? I have things in place. In addition, there could also be scenarios or cases where, in order to detect that fraud, a forensic auditor may probably employ new methods whereby your internal controls newer weaknesses may be identified, you can plug it. So at a high level, those are your objectives of any professional getting into a forensic audit or any company getting into forensic. Let's take an example. Let us presume there is a proposed investment into a country or a company which is in a different country, but it has huge potential benefits. Now you are skeptical or you're not too sure whether does it make sense for me to sort of, go and have a look into this. And that is where you get an idea. Why don't I do a due diligence? But for some reason, you're not so very justified with the due diligence because due diligence is more on the surface. To some extent, you may go into that. So you may want to go in depth and analyze. Therefore, forensic comes into picture. And there, my dear friends, you're not going to take a report and present it before the jury. For all you know, the investors may actually get a satisfaction that, hey, everything is okay, something is fishy, etc. But again, depends on a case by case. The intention and the motive is what is very, very important. When there is a fairly a good amount of suspicion, fairly a good amount of, conclusive, probably not, if not conclusive, if I have a prima facie statement to say something has gone wrong and that is substantial, correct? And that is where people actually go in depth into it. Now, where or what are the typical areas where forensic audit may probably come into picture? As professionals for us, a majority of our time could be in the financial statement forensic. Now, when I am talking about a financial statement forensic, it could be a scenario, let us say I'm talking about fudging of books, misstatement, a classical thing which we all note, which we have noted, the big fraud in India, which is Satyam, correct? And it was a shocker. In fact, it was told that after the unfortunate Harshad Mehta scam, Satyam was the biggest shocker for most of them. I think around 2008, 2009, around that period, correct? It was a major shock for everybody, or maybe 2010. And there was a clear-cut case of, some sort of a cooking of books, inflating the income, inflating the debtors, inflating the balances, cash balances, and in turn inflating the deposits. Correct? Of course, wherever there is a requirement, I'll go into Satyam case to some extent and try to give you a perspective. The second area where a forensic could probably come into picture is digital forensics, or also popularly referred as computer forensics. When we use the word computer or digital forensics, what happens or what goes here is we are going in depth to identify, has somebody played around with the system? Has somebody played some mischief around the computer? It could be copying the data without an authorization. It could be taking confidential information and giving it to somebody else. A lot of these things. For example, of course, I cannot name a few of these companies because investigations are still going on. There was a case where one of the employee who was in notice period, okay, he copied, and this was at a CXO level, fairly at a, I would not probably CXO or one level below that. He or she had taken, using a pen drive, copied all the data into that particular pen drive or hard disk, whatever, using the USB port, and everything was copied into that particular machine. From that confidential information was copied with an intention to tell that next company where I go and join, I'm going to use this. Now comes a very interesting case. Now, how will you investigate these? You will require technology forensic based tools. And that's where, like the previous speaker did make a mention that, there's a concept of forensic science, correct? So digital forensic comes into picture. So you look into your computer system, you look into how the port access was given, how the USB access was given. You see whether you have a DLP, data loss prevention program. If you have a data loss prevention program, you scan through it what all was copied. You go to the system registry settings, see if there is any modification. So a whole lot of these things are being done. Let's take another scenario. Somebody did a mischief while the website was designed. In the source code is nothing but the lines or the commands or the programs based on which a software works. Somebody has done a mischief at that level. Now all of these comes into computer forensics. Related to computer forensics is electronic discovery. Now this electronic discovery could also mean identifying, tracing out emails, trying to see whether there is related party transactions, trying to see what are the emails which are sent between people. You're trying to discover, with the help of technology, identifying some sort of a possible suspicious behavior. The fourth bucket would be bankruptcies, insolvency, reorganizations, etc. Now, many times through insolvency proceedings or bankruptcies, where the administrator is of the belief that something suspicious taken place, they may ask you to do a forensic investigation, where you will have to justify and say, hey, you know what, this is what is the facts, this is what took place, and this is what is the situation. So you give a perspective and a thought process. So bankruptcies, insolvencies. Next, workplace fraud investigations. This could be something in terms of your workplace where without the knowledge of the employer, certain things are taking place. A simple example could be, there is a cash and carry store. What happens is that the fellow who is a cashier, without raising the bill, is selling the products. A simple example. Correct. And that is the reason why many places you would find the moment of especially in restaurants, point of sale places, that are mentioned a clear board. If no bill, consider as free and things like that, so that the customer will question, give me my bill. So that employees are aware. Next, calculation of economic loss. What actually went wrong? I have to justify how much fraud took place, from where the funds have gone, from where it has been, from one source to the other source. Many times what happens, especially when it comes to fraud at the banking or banking misappropriation or the loan misappropriation, there are multiple layers. You can take the biggest of the frauds which you read on the newspaper. There are multi-layers. So fund is taken from A, put it into B, from B put it into C, from C put it into X, and there are multiple channels. By the time you realize where the funds have gone, it's a huge discovery. Correct? Next could be business valuations. This is something I gave you a perspective. Today, valuation is becoming all the more important. We have come across cases where merely for the purpose of getting business loans, for the purpose of getting some sort of a benefit or a higher price by the investor, the prices are inflated. Only later do you realize that there is no assets. There have been some stock market scandals as well, where the share price has been very highly valued and in reality there was nothing. Okay, so valuations is another. And last could be professional negligence, where somebody did not apply their mind and they without applying the mind and logic, something prima facie is clear, but they certified it to be true, whereas it is not. And later on there is an investigation which takes place. Forensics could be used. So the spectrum is fairly wide. This also gives us a statement to say that there are a whole lot of avenues where professionals can do forensic audit. Correct? And for doing forensic audit, it's not that you require a huge skill set. At the end of the day, it's all about your thought process which you are applying. It's all about the thought process which you apply. If you are in a position to think in terms of where the transactions took place, how the transaction took place. Think at that point of time how the criminal or the convict or the fraudster would have probably thought. That sort of a mindset, if you're able to get in, I think every professional would be able to do this. I'm sure, if you look back, most of us would have looked into this detective movies or serials, something like Sherlock Holmes, etc. We always keep thinking, hey, okay, this is what would have happened, this is what would have happened. And we always, for that matter, even Bahubali, correct? We were all looking, okay, why Bahubali, why Kattappa killed Bahubali, and we had that famous hashtags, etc. We always used to think, no, this could be the reason, this could be the reason, this could be the reason. So that means our mind is always tuned for that, and that's an added advantage for us. Now, what is a typical forensic audit procedure? The predominant focus is on data analysis. And of course, this section alone, I will discuss a little more in detail. So I'm just giving you a thought process, and then I'll go a little deeper into the concepts. The first, what you've seen over here is the data analysis. Now, this is a very, very critical step. I have seen cases where just to understand the data and try to prove what has happened, it takes 2-3 months. Because so much the fraudster would have probably thought, or maybe fraudster concealed it in multiple layers. He may know what works, how it works, etc., etc. So therefore, it may all give indicators. So data analysis is one critical step for you to sort of get an idea. Second, analytical procedures. Now, these analytical procedures, let me tell you, my dear friends, these are wonderful techniques for you to figure out how or probably where frauds could have taken place. Sales ratio, gross profit ratio, ratio of purchases versus the ratio of outstanding creditors, debtor turnover ratio, vendor turnover or creditor turnover ratio, inventory cycle. So these are all very simple things. But when you compare it for a period of 2 years, 3 years, try to do a likely business industry analysis, I'm sure you will get a lot of interesting analysis, interesting insights that may probably give you some sort of a flag. On the data analysis piece, there are a lot of possible approaches which we can also look into. Again, as I said, data analysis separately I'm going to speak about, so therefore I'm not spending too much time. The third is inspection, very critical. You would have noted in some various movies of action heroes, whether it may be Hollywood, Bollywood, or Tollywood, whatever language, you would have realized that the police or the investigating officer tries to visualize what happened by going into that particular place. So he inspects, he identifies. And history always tells some fundamental truth which all of us are aware. A fraudster always leaves some or the other tip. Remember, you can cheat one person one time. You can cheat some persons sometime. You can cheat some persons all time, but you can't cheat all persons all time. And that is the basic thing where people actually catch on. And that is how, when we try to discover what went wrong, you have various methods, right? So inspection and correlating with that is observation. In inspection and observation, these are very critical tools or methods used for a forensic auditor to identify what exactly went wrong. You be present, you observe what's going on, correct? Or maybe it's a historical event, you just go to that place and examine. Both of them gives a good idea. Next is external confirmation, very important. Let's take a simple example. A bank has a bank account with another person. I repeat, a bank has a bank account with another bank. Beg your pardon, not another person, another bank. Now, what is it that we do? We normally check, okay, get the bank statement, check whether closing balance matched. But did we go in detail to verify whether these transactions which is reflected in my books are reflected in their books? My statement in your books and your statement in my books are very critical. External confirmation is mandatory. If you're looking to a banking setup, especially Vostro and Nostro, this becomes very critical. In the case of Punjab National Bank, this is unfortunately what did not take place. There were no clear-cut communication, and the SWIFT module was outside the core banking system. And therefore, the SWIFT had certain entries which never came into the books. A mere reconciliation, of course, I've not done that investigation, but based on what prima facie we are looking, we read on the online media, I'm just trying to share it. A mere investigation between your balances and my balances, external confirmation, would have solved majority of the problems. Now you must be thinking, sir, there are 500 line items. How do I verify it? Very simple. What you do is take the transaction here, take the transaction there, correct? To use a simple Excel pivot. See, at the end of the day, any transaction has debit, credit. Check whether my sum total of debits, your sum total of credits are matching. Okay, so that is too much, so many differences there. Okay, take the sum total of all debits for 1 month versus all debits for 1 month. See whether they're matching. No, that is also not having. Come one level down. Can we do it for 1 week? Can we do it for 5 days? So like that, you will have to come up with innovative methods, because it is impossible for you to go in depth for every transaction for multiple reasons. Of course, limitations of forensic audit are too many, which obviously I cannot mention it over here. I'm starting with the concepts. Probably that we can have a separate detailed discussion or a workshop on forensics. That's a little later we can discuss. So that's where I said external confirmation becomes very critical. Next, recalculation. Recalculation is a wonderful evidence, especially where system-based controls are there. Let's take a simple example, interest calculation. See, I'm sure most of you in our way back in auditing, you would have read this concept. There was a person in a case of a bank. What he did was the interest rate which he had deployed to calculate savings bank or checking account, in case of abroad they call it current account, checking account they call it, where checks are basically issued. The rate of interest which was calculated, either savings bank or on deposits, whatever it is, he had written a simple formula. Whatever happens, round off the number, rounding down technique we call this. So if the interest was 45.58, only 45 rupees was transferred, 0.58 was transferred to somebody else's bank account. And who is that somebody? Some indirect relative of the developer of the software. Now, this sort of a fraud, unless you do a recalculation, there is no way for you to identify it. Now comes the interesting question, sir. How do I do recalculation? Very simple. System has an interest rate calculation procedure. Apply the same procedure. You might be thinking, sir, why will I get that decimal deviation? That's too small. Too small, but you multiply into the number of deposits and advances. You can imagine how much is the impact. Correct? So there could be small amounts which are carved out, but over a point of time, it becomes very, very large. Interesting this. Next, reperformance. Perform some activity as though you are the authorized person to do, and identify where probably things can go wrong. Reperformance is one more terrific method for you to identify these frauds. Next is inquiry. You go a little more deeper, try to go check, meet various people, try to check with some person. And I'm sure many of the times, you have seen in me, how the interrogation takes place, asking the same question to different people in different style. Some places, we'll have to use mind games. You can say that, he agreed that, the fraud has taken place, only you have to confirm, various mind games, etc., which we see that keeps on going. And last is interviews. Speak with various people, get a perspective, see news media reporting, try to fill up questionnaires, see internal control checklist, go back to work papers. A whole lot of these things are actually things which you can use to uncover a fraud as such. So that's from a audit procedure what you can actually do. Now, taking this a little further, I want to introduce a very important concept to you. And that concept is called occupational fraud. Because majority of the frauds which happen are of this nature. An occupational fraud is nothing but a fraud committed by the employee on the employer. In other words, employee cheats the employer. It's called as workplace fraud, internal fraud, employee fraud, etc., etc. And it falls under these categories, which we're going to discuss. It could be concealing something. It could be taking a bribery, kickback. It could be misappropriation, or for that matter, it could also be, window dressing. Correct? These all could be occupational frauds. I've seen cases where a customer has an overdraft account as well as has a current account. On the 30th and 31st of the March, the entire overdraft amount is transferred to the current account, or on the 31st of March of reporting period. Why? The moment overdraft entire amount limit is transferred to the current account, we all know that overdraft amount is nothing but a liability, is an asset for the bank from a bank perspective, and current account is a liability from a bank perspective. So it indicates to the bank that, hey, you know what? This particular branch has having an active business of so much. And generally in banking parlance, especially for bank managers' performance, etc., they are measured based upon the assets and liabilities. And these assets and liabilities are nothing but ignoring share capital and other things, because for a branch, nothing called as share capital exists. For the overall bank, it exists, right? So the overall, what is the major assets for the bank? It's the advances, and major liabilities is the deposits. So both these numbers are skewed. For all you know, both of them should have got netted off. And many a times, these sort of indicators are classical examples of window dressing. And that's why, my dear friends, if you look into LFAR, there is a clear requirement in one of the processes. LFAR is long form audit report. There is a clear clause which says, has there been unusual movement prior to or post the balance sheet date? You just analyze this, you'll be able to capture it. And in fact, generally from what I know is that if you have an overdraft account, you should not have a current account, or vice versa. You can have only one account at a given point in time. If you have both, then it actually is an indicator of something gone wrong, or there should be some specific purpose or some permission, etc. Because it becomes difficult for you to track. Correct? So I hope the concept of occupational fraud is clear. Let me go a little more deeper into this. As I explained, this occupational fraud, can be normally of three types, or types of fraud is called: corruption, asset misappropriation, financial statements. When I use the word corruption, we are referring to some sort of a conflict of interest being there. Or you telling that, hey, give me this, I will give you this in return. Giving a vendor in favor of that person, giving a kickback. And trust me, my dear friends, corporate corruption-oriented frauds are much, much higher than any other fraud. Just telling that, hey, you know what, give me 10% kickback, I'll approve your invoice for 20% more or whatever. Or give me 10% only, then I'll approve the payment. These happens many times in the, certain sectors. So conflict of interest fraud could also be an example. I am, my relative is submitting an invoice and I approve it. Correct? Conflict of interest. Or I did something as a consultant and now I became part of management, or vice versa. Trying to justify what I did in the previous position once I come into the next position. A lot of these things could be there. Bribery, extortion, we keep on looking into it. And extortion is basically forcefully asking money, ransom, various things like that. Asset misappropriation. Your cash and inventory are classical examples. And that's why cash always requires multi-level control. In fact, dual is not sufficient. You don't have three-party controls. And that is why, as a procedure in internal control for a bank, they always say cash should be handled by two people, and the bank manager should regularly verify that. And this should be also supported by the concurrent auditor who will regularly also sort of, verify it. Next comes your fraud payments or fraud disbursements or fake payments. Many times this happens. Fake invoices are given, POs are inflated. A lot of cases are there when, as and when I pick it up, I'll probably explain each of them. Inventory. Inventory is one classical instance. So I remember, long back when, one of the webinars which I was attending, seminars, webinars has become a recent trend. Now, this was a fairly old, probably 4 or 5 years back. So one of the professional who was addressing on the other end, he was talking about a type, he had his associate or his friend or somebody who went to do an inventory verification because the bank had requested this auditor to do an independent inventory verification. And this gentleman had over this chartered accountant, he went to that place. And he found that there were large granaries and, large godowns, a lot of things were there. So that person explained that, sir, this is the cubic centimeter, cubic feet, etc. A lot of explanations he gave. And therefore, based on this, this is the value of the inventory which he had. So there were large cylinders. Let's presume, huge cylinders, basically. Huge cylinders or huge places where you can keep your inventory. Now, what had happened very, very interesting was when that person sort of, went and verified the inventory, somewhat he was a little suspicious. Can so much quantum be the inventory bill? So what he did was, he said, I want to go inside and see. And he said, you arrange a ladder, I will actually go. He climbed up the ladder and actually saw near the rim or the, the opening of that bin. And he saw some inventory materials there. He asked them to please lift it so that I can see. When he lifted, when that respective employee who was there at that point in time, he lifted it. After about 1 or 2 feet, they found only sand being filled in that. These are cases which happens in inventory fraud. And many times what happens is, in these cases, what also does is, once they have got the loan, they immediately take an insurance because that's a mandatory on your, only then your working capital loan is given. And within a few days, what they do, they burn the inventory. When they burn the inventory, the insurance company indirectly, of course, does the investigation, etc. But the claim comes through. So like this, a lot of cases are actually there when it comes to this sort of a setup. Next comes misuse. Misuse is where assets are used without permissions. Assets are used literally without permissions. Now this, what it does, my dear friends, is it actually, a company's assets being used for somebody else, etc., etc. A lot of these things can take place. Financial statement frauds, window dressing, etc. Satyam is a classical case. Satyam case probably in the next few slides will pick it up. Now, whenever we talk about this concept of occupational fraud, we always refer to this fraud tree. What you see on the screen, you can also Google search, you will get this fraud tree. A fraud tree is one such setup or one such scenario where it gives you a perspective on where all possible frauds can happen. For example, in corruption, we spoke about this conflict of interest, bribery, illegal gratuity, economic extortion. Financial statement fraud, overstatement of assets, overstatement of liabilities, timing differences. Just because I need to recognize revenue earlier, I ignore the principles of accounting standard, recognize it now, or defer it. These are all things which happens on a financial statement. And from a financial statement point of view, if you have solid knowledge in terms of your stock and other information, it becomes all the more handy. Correct? So that's another type of a fraud which keeps occurring. And these are all red flags, or red flags concept. I will speak about it a little later. You will get the concepts about it. But these are all possibilities. When it comes to asset misappropriations, you have cash, theft of cash, which is fairly simple. Misappropriation of cash, teaming and laddering, we keep on speaking about it. Fraudulent disbursements, inventory, a few lot of assets, misappropriation, a whole lot of these things. So this fraud tree gives you a full thorough thought process to give you what exactly is this all about. Correct? So that's basically, my dear friends, the concept, what is involved at an occupational level. Sorry, I think there is some noise there. Let me quickly mute them. Perfect. Great. Taking this conversation further, when any fraud takes place, there is a concept called as a, the evaluation. Why is fraud actually taking place? So therefore, a fraud takes place majorly because of multiple reasons. And that can be, in a nutshell, put into this form, what you see on the screen, and that's called as the fraud triangle. A fraud triangle basically talks about, it gives you a sort of a framework, why any person does a fraud. At a high level, it's these three. And of course, you have the fraud diamond also. We'll speak about it later. I think it's the very next slide. Basically, there is pressure. There's a huge amount of pressure. Satyam is a classical example of pressure. Now, what had happened? Let's look into the case. What happened in Satyam? Most of us would have read that very well. Satyam was a typical case where the investor's expectation was increasing. Competition amongst the peers were also increasing because we had Infosys, we had Wipro, we had TCS, we had Tech Mahindra, which was coming up. A lot of these companies which is coming up, and Satyam was also on the race. At the same time, US 2008, you had this global subprime crisis. Now, these all factors coupled with some problems or some challenges made it all the more difficult for the promoter or the chairman, who, whatever you can call it, to sort of, give more profitable numbers. It became very difficult for it. So therefore, there was some sort of a financial pressure. Many cases, there is also emotional pressure. I remember one of the cases, I happened to, this is a part of a general statutory audit which we are doing. We went to a branch, we were, sort of just going through it. And then we suddenly saw one FIR copy, one big file was there. So I was very surprised. I said, sir, what happened? He said, 3 years back, there was a fraud which happened. So I said, out of curiosity, what happened? One of the employees, on his last working day, look at this. And this is a bank, he was in the retirement. So he was turning that 58, 60, whatever is that retirement age. On that last working day, he was a cashier. Last working day, or maybe one last working week, he had some sort of a huge financial pressure. And it was not more of financial, it was more of an emotional pressure because, there was some, his daughter had incurred some debt, obligation, some story behind it. What this cashier did was, he took 10 lakh rupees to one person and just gave it on the counter. Just take it and give it. And next day, on the same day, even when they're totaling the cash, the books and the cash was obviously not matching. Immediately the cashier, he said, no, sir, I don't know why it is not matching. So immediately the first level clerk or whoever is the officer immediately came and said, sir, something has gone wrong. They reported to the bank manager. Bank manager got scared. He said, yesterday it was matching. How? He verified it. Then the bank manager suspected, the clerk itself. Then they said, no. Then they finally caught hold of the cashier. Then he said, yes, I have to do it. Why? Emotional pressure. So it is that one factor. The pressure is one major factor. The second could be opportunity. Opportunity, classical example is, jovially put, we are driving, bike, car, cycle, whatever, of course, ignore cycle, bike, car. We see in and around, there is a red signal. Nobody is there on the road. We immediately see, is there a police or is there this camera which is watching us? Nothing is there, just jump. Now, what did you do? There was an opportunity for you to do some mischief. And that's exactly what one more angle of a fraud is. There was an opportunity because nobody was bothered. There was no internal control. Security guard was not there. It was left open in there. I just took it. Correct? These are all classical examples. Now, put in a different language, you would have seen whenever there are these riots which take place, many of them jump inside a showroom and just pick up whatever they feel like and disappear. That's a classical example of an opportunity. Ability to execute a plan without being caught. Because I know nobody will catch hold of me. Or sometimes management overriding the control because there's nobody else to overlook that. This happens especially in smaller companies, even in larger companies where they don't have sufficient internal controls. And the third is a very interesting thing. Justification for dishonest action. This is more on the concept of Robin Hood. Oh, no, I will steal from him and give it to somebody else. See, whether that is Robin Hood did good or bad, those are totally different things. As far as the company is concerned, fraud or cheated. Correct? So justifying, saying that, no, anyways, that fellow cheated somebody and got the money, I will also cheat him and take him away. Those are all secondary. The question is, I am investigating one particular scenario. There is some sort of a rationalization, personal justification, and I'm trying to justify. Another case, many a times, which can also happen is, no, I will take the money today, tomorrow I'll come and keep it back. Correct? So many of times, people have actually kept and they've been happy. Sometimes when they kept the money back, they've realized that, it is a problem. So a lot of things like this, etc., etc. So these three are, a framework for spotting high risk or high fraud based situation. And this gives you a good perspective how a person can probably look into fraud. Now this can be, this is a fraud triangle which is called as incentive or pressure. I need to hit my monthly targets. Opportunity, nobody really bothers to check. Attitude, rationalism, everyone is doing, therefore I'll also do. Everyone is skipping the road signal, I'm also doing it. And the last thing could also be the fraud diamond is also the capability. He says, boss, I am so very talented. Why should I not use my talent? And this is unfortunately what these hackers and other people do it. Correct? Those people who know how to exploit, they can use it in two ways. One, exploit it and make money out of it. Second, probably, correct, inform them there's something gone wrong, more like a whistleblower, so to notify. In a case of companies, they call this hackathon, etc., etc. So those are capabilities, but it is used on the negative context. So therefore, there is an element of. So I hope the principles of the fraud triangle is very clear, because this is something which has to be applied in every situation to identify or sort of to decide whether actually fraud possibly had taken place. Taking this conversation further, going a little depth into this, what could be the probable pressure factors? Okay, there could be some sort of emotional pressure, financial pressure. I have to repay my debts. Stock prices are falling, therefore I had to do some mischief. Especially in this insider trading cases, this happens. To maintain reputation, Satyam was a classical case. I want to ensure investor expectation is met. And this could be sometimes in the short term, just one quarter, or long term, every quarter. Whenever there is a necessity of cash, I can do it. Correct? So these are all classical examples of pressure factors. Next, there is some sort of a greediness or, itchy palm, something, why don't I try it? Correct? Or desire to live very well. I want the costliest of the mobiles. I want a very nice car. I want a very nice this. I want a nice house. A lot of these things are all things which will put up pressure, and those people are not able to do it. High amount of personal debts and health expenditure. Possible. There might be some personal obligations, etc. Unexpected financial needs. Now, all these things are pressure factors. If while I'm speaking this, I'm sure you're able to witness a lot of things in your mind where movie scenes are actually coming, and those are exactly what pressure factors are. A few other pressure factors could also be bad habits. Certain things like, drug, gambling, narcotics, various things like that. Or some sort of a pressure relating to job. I am not satisfied with the job. There was some unfair thing which happened. Something went wrong, and all these things has created a mental pressure, emotional pressure, lower wages. Supervisor is not appreciating. So a lot of these things actually creates the pressure factor. Now comes the opportunity factor. The opportunity could be top management and owners of a business, especially in particular, they have this overriding power. I think I made a mention of it. Nobody looks into what these people are done, and that's why corporate governance becomes all the more important. And that's why your listing agreement, larger companies, audit committee, all these things come into picture. Weak moral policies. By default, that gentleman is not having low ethics or no ethics, correct? So therefore, I had an opportunity. I remember reading one very nice statement. It says behavior versus character. So behavior is what a person does when everybody is watching. Character is who you are when nobody is watching. A beautiful statement on ethics. And that is one of the reasons where perhaps frauds can actually take place. Undisclosed contracts with third parties and partners. You're like, hey, anyways, this particular contract, everything I'm only going to approve. So you give me a referral fee. You give me a kickback. Next, capabilities to assess quality of job performed by employees. So I know this employee, I have a superior capacity. I know this person is, even though doing well, I don't want to give them rating, performance appraisal, etc., etc. There is no well-disciplined environment. Ignorance by top management. Ah, okay, small fraud, let's ignore. Or there is healthy audit environment is not. Opportunity factors. Let me give one particular case which I happened to read on the media. Because I do a lot of research on this. One of the cases, what had happened, there was a bank. The database administrator of the bank, this is a small bank, probably about 5 branches or so, cooperative bank. The database administrator, what he did was, he had access to the backend database. And that bank backend database, there were no logs maintained. So what this gentleman used to do, he used to go to the backend, pass certain entries, as a result of which, and this entries used to pass saying that, debit or credit his accounts so that he's able to get some additional FD interest, etc. And from where the cash came, just pass an entry, no link, nothing, just create one fine day, create one, sort of a deposit. And if you go and see the source of the deposit, there is no trail for that. So like this, what he did was he used to play some mischief, and he used to start initially with 5,000, 10,000, created FDs for that. Then greed of a person will obviously increase. So he started doing 10,000, 15,000, 50,000, and he went as high as even 10 to 20 lakhs. And what he used to do is, he knew that if I pass an entry for FD, it will be a problem because somebody will ask me, I have to pass a journal entry, etc. So he was smart enough, he did not pass a FD entry because small amounts he used to do. Bigger amounts he knew it will have a problem. So what he did was, when the system calculated the interest on savings bank and FD, he used to go and alter the interest amount. So system used to calculate as 35 rupees. After 35, he used to just add 3 zeros, 35,000 rupees interest. And this, there is no way nobody actually tracks it. And this is a fresh entry because it's P&L debit and the respective account credit, savings bank account, whatever is there. So what had happened? By doing nothing, he used to get more interest. And this became very difficult for any person to catch, because in backend, if somebody does a fraud, there is no way. And how did you catch hold of it? Only if you do analytical procedures, take the sum total of all the FDs, multiply into average rate, see whether that is the interest which is being credited. If any exception is there, you can catch it. And he was smart enough. He said, okay, let TDS get deducted. So TDS used to get deducted. In one other case, a similar scenario happened. TDS was not deducted. So based on that, people are able to identify. So these are all cases where opportunity actually brings it. See, I'm trying to bring a lot of practical perspective because, otherwise fraud investigation is too boring without a practical case study, correct? Next, what are the sort of efforts to justify fraud? These are also that opportunity, justification, the last one. So he might justify, say, I borrowed money so that I can pay back, or I took this money so that I can give back. Hey, I am putting so much efforts to this business. He is paying me only small amount, so therefore I only took the money. Correct? Nobody has suffered. So what is your problem? Company is sitting somewhere else. Nobody has an impact. So what's your problem? I have taken for a good purpose. Robin Hood, I told you. Yeah, I didn't know this was a crime. I thought money was kept there. I just took and went. I didn't know it was a crime. So these are all justifications which people generally do. Next, hey, he did that. He cheated that fellow now. So I will also cheat him. He deserves that. So things like that. Anyways, business is evading tax. So therefore, I just took some small portion. He is a cheater, means so why you should call me? I am cheating from him. Okay, so these are all the justification which actually is brought in so that you are able to convince that it's not a fraud, or you're able to do that. So that is basically the third principle. Now, whenever fraud takes place, there are some mechanisms or methods for you to identify. And that's called as a general profile of a fraudster, also popularly called as the red flags. Whenever a fraud investigation takes place, these are all alerts, because generally when we go for audit, we don't go into the depth of forensic, but we should be aware, is there some sort of an unusual trend? For example, he's a clerk, but you see he having an iPhone. You ask him how you got an iPhone, sir, somebody gifted me. I've seen cases where person was very, very simple dressed. He used to wear that Hawaii slippers, or that bata, whatever the basic slippers. But he used to always have a new jewelry every month, a chain. Not a lady, it was a gentleman. He used to have various types of chain. And every time when asked, he used to say, no, it was my in-laws gave me some, some property I sold, a lot of justification. He was actually a fraudster. He did some mischief. Some person is experiencing acute financial difficulties, and there are possibilities where you can do so. Very close association with customers. Sir, this vendor approves, sir. What, sir? You're checking why you have to verify all those approves, sir. Sir, this customer is very good, sir. Let's render the service. Correct? So all these things are various possible. Work pressure, targets, meet the targets. I've seen many cases. This is one thing which happens. Whether it's a fraud or not is a different question, but it happens. Especially when they have to book a revenue for that month. They have a monthly target. So person will, whether the sale happens or not, they will book it. Next month, what they'll do, they'll book a sales return. So those are also again pressure. Control issues. I am not willing to share. See, unfortunately, many a times we have seen this is a human tendency. People do not want to delegate. Two reasons. One, when you see, I think imagine you going to one company and you ask some question to a person. Sir, only the head accountant knows. Managing director asks a question. Sir, only head accountant knows. So head accountant gets that ego, that prestige. Oh, everything is based on, dependent on me. Whatever happens, that I have to give the clarification. So that builds that sort of an ego within a person. And he wants to enjoy that position. He might misuse that position, that's a second. But tomorrow, if you are putting in a system, etc., in checks and balances in place, he feels that his importance is reduced. Possible scenario. There are some people who are regularly keep on complaining, sir, how much ever I don't get paid, this, that, all those stuff. Then sometimes family related issues, divorce, couple, husband and wife issues, child related. So a lot of problems. These also could indicate that, these persons. Next, irritability, suspiciousness, trying to be very defensive, different characters of person. Sometimes addicted person, addicted with some narcotics, XYZ. This is a very important refusal to take vacations. So when I visit a place, some person will introduce, sir, he is the long-standing employee of our organization. Last 15 years he's been working for us, very trustworthy. Immediately when he says very trustworthy, I have a small eye or a suspicion. Not that it could be a case, but it's a red flag for me. Maybe there's a fraud, maybe if he's all good, great. Especially those people who says that, I have not even taken a single day leave, etc. It is impossible, sir. It is impossible for a person to, be working without taking a single day leave. Correct? Because you are a human being, you require some breaks. Correct? At least, if not a break, at least for health reasons, okay, you may be having the best of the health, or you're having all the whatever that TV advertisements, what is that, healthy tea, whatever XYZ tea, or whatever it may be. But you will invariably want to take a break. Correct? Those are cases. Another case is, even if it is a vacation, people used to come and work. That's also a red flag, especially on Saturday, Sunday, festivities, occasions. They used to still come and work sincerely. So those are all red flags. Somebody enjoying supervisor's trust. Say, hey, sir, whatever happens, handle this person, handles. So that could also be an indicator. Next, there's one more indication. Prefer to work alone. He used to always say, when I used to, okay, go. So whenever you go near the person, he used to always shoo you off. Maybe some sort of a behavior. He is unusual, abnormal. So these are all indicators for you to identify there is something suspicious. So this gives you a profile or an indicator to say, hey, this guy is somebody whom I should be watchful of. So that's basically how the fraudster's profile is. Let me take this conversation a little further to see, this is one scenario. Who can defraud whom? So many cases of it. Anybody in the screen on this chart, when you can see, he can defraud the other person. Company can defraud the government, tax evasion. Company can defraud competitors, bribery, intellectual property threat. Company defrauds stakeholders, account statement misuse, securities fraud, etc. Company defrauds owners, insider trading, related party. In fact, related party is one of the most difficult things to catch hold of. Extremely difficult. Whenever you have to do a related party investigation, very difficult. If it's a company, you can identify. Non-company, impossible. Correct? Next, you look into customers and third party, false advertising, shortage shipments, defective products, price fixing, a whole lot of these. In fact, this e-commerce, let me tell you, my dear friends, frauds can be n number. Some fellow will ship one box. Inside that box, nothing will be there. The box will reach that fellow. Actually, this was a reported case. So Mr. X, he wanted to convert illegitimate money into legitimate money. So what he did, he said, okay, fine, I will list myself in an e-commerce website. And I will tell that person, Mr. A, you buy this product. He will transfer this product to that fellow by doing all shipping, packaging, etc. In reality, nothing will be there. Maybe a pencil will be there. The price of the pencil could have been 15,000 rupees. He will ship it there. And generally, how in e-commerce it works is that that person, whoever is buying it, he will pay to the e-commerce vendor. Let's say Amazon, Flipkart, Snapdeal, whoever it is. And these companies in turn, after the terms have been met, they will deduct their commission and balance they'll pay to this. Now, what this guy used to do was, he used to give this fellow the money and said, boss, you make the payment. So whoever bought the goods used to buy, put the money into the bank account. Now this money, when it comes to the bank account, I have to invariably receive that. So this e-commerce vendor actually gives me back. But what is the commodity I've sold? I've sold a fictitious product, something in the name of product, something which is not at all worth. Now what happens in this? Through which illegitimate money has become legitimate money. And these are reported cases. Like this cross-border also import-export happens. Now, these are all cases. Now, if you have to investigate these, you require a lot of financial acumen, you require a lot of business knowledge, a lot of systems, because the more and more complicated things become, it becomes very difficult. So that is why. Let's take another example. This also happened in the case of GST. What is that? That e-invoicing, not even e-invoicing. There's a concept called e-way bill. E-way bill. Now, this is how GST department identified fraudsters. What had happened was, lot of this e-way bills were generated to indicate that purchase and sale had happened. In reality, nothing took place. Merely fake invoice credit was created to and transferred to somebody else. Now, department had applied various analytics and they identified from one particular IP address, almost close to, within that group, whatever they identified, 50 to 70% of the e-way bills were generated from the same IP address. And these were all related. They put in some sort of a data analytics module, data science module. They figured out something is going fishy, suspicious. And that is where they were able to identify that, yes, something is gone wrong. And then they were able to catch hold of it. This was reported in the news media as well. Coming back, company to customers and third parties, fake products, refunds, theft, etc. Company to vendors, fake payments, duplicate invoicing, very, very, big issue. POs are created to inflate. I remember a case where the service tax became GST or VAT became GST. So POs had to all undergo change. That point of time, somebody did a fraud within that and increased the PO value and extra payment was approved. So you can name it, people come up with things. Correct? Insurance, one more classical example. I've been talking about various examples, right? Fake products, fake laws, kickbacks. So a lot of these things are perhaps possible. So that gives you a perspective. In fact, this chart gives you a thought process. We don't know who is trying to cheat whom. Correct? That is basically the perspective which I'm trying to show. Now, one very fundamental question many of them ask, what is the difference between forensic and statutory audit? So probably to give a quick nutshell, statutory, the focus is more to express true and fair. In a forensic, it tries to determine the correctness, accuracy. In the case of techniques, in statutory audit, substantive and compliance are used, whereas forensic goes in depth. We do an investigation. Sometimes you go, it's predominantly substantive if you ask me, and it is test of transactions, test of details, etc. The period when it comes to statutory audit normally is restrictive for one financial year or one quarter, whereas forensic is not that case. It may go much beyond. It may go much beyond. We do not know what is the time period. It may go much beyond. Next, management representation in a statutory audit you can rely upon. Forensic you cannot. Try to go for some more in-depth verification, in-depth analysis. Off balance sheet items, statutory, you don't go too much into it. When it comes to forensic, off the balance sheet, you have to get an idea. What is it? What is the issue, etc., etc. Last is adverse findings, statutory audit. If they're adverse, we just give a disclaimer or qualified opinion. Whereas here, if there is something which is adverse, we have to go ahead, identify who did that mistake, mischief, fraud, etc., and pinpoint and say, hey, this is exactly what happened. Okay, so that's basically what I wanted to give you a concepts. And I thought I'll discuss one case study, and we'll look into, of course, Enron, and I'll also speak about the Indian Enron case, which is Satyam, which most of us are aware of. Thank you. So let's probably look into this Enron case and what exactly happened. You know, there was this James Chanos, the president of Kainos Associates, specializing in short selling, you know, a lot of things he was doing. And he was, you know, he manages a portfolio of overvalued securities. There were major indicators that, you know, overstated earnings, highly overstated. There was a business plan which was just not sustainable. And there was upfront, or there was, you know, upfront engagement in sort of a fraud. These were few things which was noted. And there were a multiple key red flags over here, which people were able to get some sort of a thoughts. There was an alert in 1999, way back, just like how we have SEBI listed filing here, there also you have what is called as Form 10K filing, Form 10Qs. So these all give some amount of red flags. The return on capital was 7% before tax. And 7% is low for this type of a firm. So that we call this an outlier, anything outside that. And Enron's cost of capital was close to 9%. That means what? They were not earning money. So they were actually trying to fudge the books. And this company's initiative in the telecom field was not a sustainable plan. They wanted to enter that field. It was not sustainable. And there was a short sale of Enron shares, November 2000, $80 per share. And there were a lot of good number of people on the top managements were slowly leaving the company. There was some sort of insider selling continued. So these were all the flags which indicated that something going wrong. Even in case of Satyam, if you had noted, just about anywhere between 1 month to 6 months backwards, if you see, a lot of independent directors started quitting, correct? And this is a revenue projection just to give a perspective, revenue statement just to give a perspective, what year, what happened, etc. So you would notice that between 99 and 2000, the income just rose up, correct? Revenues. And the net income was to some extent, you know, marginally it rose. And these are all indications saying that, you know, something fishy actually went there. And if you look into what they did, they also identified a lot of special purpose entities. They executed a lot of related party transactions. They reported over 1 billion of false income that was clearly evident there. They said that, you know, in order to hide that bad investments, etc., they manipulated cash flows. And many special purpose entities or vehicles, they were created just towards the year end. We know that when something is happening during the year end, it is always something suspicious. Look into something in detail. Correct. And let me also, before I go into the next section of using data analytics, let me also throw some light on this concept or this principle of what happened in the case of Satyam, and probably some insights what actually took place by reading a lot of newspaper media. So Satyam predominantly was a case of overstatement of assets, overstatement of income. Now, what this gentleman did was there was no adequate revenue, so he created fictitious employees. Sorry, fictitious revenue, fictitious customers. So when you create a fictitious customer, obviously you started booking revenue. So you had to pass an entry, debtor debit or receivable debit to revenue. Now we all know that if it remains long period in debtor, obviously there's a suspicion. So what this gentleman did was, he converted the debtor into a receipt, and that receipt immediately was converted into a FD, fixed deposit. And he happened to do all of this in such a way, such a beautiful method, that because they were a software company, right? They were able to print the exact bank statement, however it looked in the bank, no? The same way, in fact, probably a little more beautiful. Okay, they were able to print the bank statement and the FD receipt, and they were able to print it and bring it, and that was brought and pushed in. And this was concealed in such a beautiful manner. Nobody thought that this could actually be a fictitious case. So what he used to do was, he used to identify one of those dates where the original bank statements were there. In between that, he used to keep this with the same date, such that the debit, credit, whatever came in ultimately moved out. So when I look into that page, it looks genuine for me. So what he did, fake money came, fake customers, fake money, fake revenue, and that is booked as, what do you call, fake FD. If you have so much fake, then obviously you have to pay income tax. This fellow did not want to pay income tax. What did he do? Fake employees, ghost employees. Created a lot of ghost employees. They didn't have PF, they didn't have ESA, but created a lot of mischief, routed all the money to that. Legitimate money, he started routing them. So he used to say that, hey, you know what, I have kept FDs as a sufficient security and I have to pay salary, therefore I routed it. And that money was routed through various sister concerns of him. It went to some employee's bank account and got routed. And when this kept on happening, obviously he used to play around with all these. And one fine day, he could not keep on. See, because whenever it happens, this fraud happens. No, it's like balloon. You blow air into a balloon, it is nice to a particular shape. You blow some more air, it becomes bigger. But you can't keep on blowing, right? Because the investor expectation is obviously you have to do better than the past. So how much can you keep on blowing? That is where he became so much inflated, he did not know what to do. And that's when he proposed that I will acquire my sister concern called Maitas, which was a real estate based company. And every year he said that, anyways, real estate, I will overvalue the asset. Whatever is the fictitious overvalue here, that and this I will sort of adjust it and somehow close the deal. But what happened? Satyam was a software company. Maitas was a real estate company. What is the nexus between both of them? He went ahead in the shareholder meeting. Shareholder said, boss, it's nowhere related. He did not get the approval. As a result, he didn't have any other option. And he had to make a disclosure. And that day was considered as one of the worst days in the Indian stock market history. And he, in fact, made an announcement. It was like riding on a tiger without knowing how to get on from it, other than by being eaten by it. And he made a confession. He wrote to the stock exchange, he wrote to SEBI, he wrote to the police officers, and immediately surrendered. He was not able to do it. Then immediately stock market price fell down, 400 rupees share came down to 40 rupees. In fact, it came to less than 10. Lot of issues took place. Revival came into picture, board appointed. So a lot of things came in place. And when they were doing the investigation, they realized this entire modus operandi. In fact, even if you see this Satyam's restated financial statements, I think for 3 years or 5 years they had to restate. The restated financial statements has an element of suspense about it. You can go and visit it. Because after a point of time, the forensic auditor were not able to identify, because he did so many transactions, you was not able to just identify it. And you just can't do a control Z of all the transactions and go back to the history. No. It is like, I'll give you a very, very simple example. Morning, you came and switched on your computer. Evening, you're switching off your computer. Will you know the entire set of activities which your computer did? You cannot say, no, sir, my computer maintains a trail. Here you maintain a trail. that the trail was not maintained. That's exactly what happened. And that is what, my dear friends, gave an indicator or a suspicion or some sort of a fear factor, some sort of an investigation. They went so much depth. They spent almost close to about 6 months to 1 year or 2 years. I'm not too sure. There is a lot of investigation. In fact, that one stage, income tax of our department sent a notice saying that, hey, you know what, you guys have defrauded, so we want to open your reassess all those things. I think 148 or something under the Income Tax Act. Say issued a notice. Immediately, the newly formed board of directors, they said, sir, please give us some time. We ourselves are trying to understand what is going wrong. We'll definitely cooperate. But they initiated. He said, no, you have to pay additional tax. Immediately, the board of directors said, see, sir, what happened was, in the case of Satyam, there has been overstatement of income. When there is overstatement of income, what happens? It means taxes have been paid more. So now you have to refund to us. Why should we pay you? So income tax officer was taken aback. He said, no, let's bring all the statements, etc. So he said, okay, you are saying that you have paid a tax of 30 crores. Show me the proof for it. When they submitted the proof, the income tax department is verifying it is not appearing in their ledger. And if you recollect, that was a time when 26 years was not there. So then they realized, Satyam, they had gone to the next stage where even that income tax payment challan was duplicate. He had created a fake. So you can imagine how much, possibly they have gone through, correct? So that is where it becomes very, very challenging. And that's how they have been able to, a lot of investigation happened. And finally, they decided this much amount we just cannot identify. You had to write it off. They had to write it off. So incoming investor said that we will take a hit, and they went ahead. Of course, today fairly, I think things are better. Touch wood, we're hoping that things go fine. Okay, so that's basically my first segment where I want to take you through an overview and the concepts of forensic audit and the various elements of fraud. The next segment, what I'm going to discuss is how do I use data analytics for the purpose of my fraud investigation. Because today, my dear friends, any investigation you do, you are dealing with a large set of data, and therefore it is very important for you to use these analytics. So how is it that I'm going to use these analytics? There are a lot of tools. A simple example could be Excel. I've just given one example like, Zoho Analytics, Power BI, Tableau, that's another software, Tally, ECAT, TCAT, a lot of tools which are available. But the real question is, what is it that you intend to identify? That is the most important thing. Because whenever you're using a data analytics, you need to have an audit objective. And you need to keep in mind that the data which you have will not be in the format and content in which you want. It is like a lot of dust around the data. You need to clear it up. And that's why we call it as a data scientist. When it comes to analyst, he cleans up all the dirt and identifies. And that's why it's called data mining. You go deeper into the data to identify patterns. So you need to spend some time to curate, clean, cleanse it. A simple example could be you've got an Excel statement or a notepad file. You have to convert into text to columns in an Excel sheet, put various pivot, a lot of things you do. So that's basically curate, clean up the data in an analyzable form. Second is profiling. Just take a profile. Okay, how many transactions, how much debit, how much credit, at a macro level understand. Okay, 500 accounts are possible fraud. How many accounts opened in the same year, closed in the same year. How many accounts opened and closed within a gap of 360. So like that, you try to give a lot of profiling. Next is analyze. You look into all those transactions, you analyze all those transactions where there are essentially something which has gone wrong, something like an outlier. Like for example, Enron, you looked into that revenue. The rate of revenue change was an outlier, right? You look into those. Then you go a little deeper, you investigate, observe the data in depth. So you see what went wrong, statistical queries, Benford law, relative size factors, a few of them. Examples I will give it to you. And last is, of course, you need to document and report them. You may have audit logs, you may have to index them, you may have to prepare a report, etc. Now, these entire things, just to give you some sort of a statistics, what happened, in terms of why it is necessary. So if you look into this PwC 2018 Global Economic Survey, maybe 2020, they may have an updated information. They identified that, asset, cybercrime and fraud committed by the consumer are major types of frauds. Who is committing the fraud? 52% were committed by internal actors. 68% of external perpetrators responsible for 40% of the fraud. 90% were all brought into the attention of the board of the management, which was good. 24% were committed by senior management. If you want latest statistics, you can in fact visit the online blogs. You get a lot of these interesting information. This is something which I just picked up. I thought I should share it. And also it spoke about the rate of growth of fraud, and this is when 2018, 2020 statistics, as I said, I couldn't pick it up. So these were just some numbers. And you can also see country-wise where frauds are happening, especially in 16 versus 18, you can see the growth. Look into that. Especially if you look into the Asia Pacific region, 30 to 46% is increase. And I wouldn't be surprised if you compare now, it is drastically even more increased, correct? So fraud is a common thing which occurs everywhere. It's not that, oh, it happens only in my country, that country, etc. It can happen. Maybe reporting of the fraud itself is a big question mark. So the priority is very, very clear. Can I bring in a fraud prevention system? And that's where you can use analytics, etc., either to identify early stages, red flags, etc., which is possible. So what exactly is this analytics? Where do you think you can use it? So analytics in a very simple format is introspecting data. You sort of clean, you sort of, format it and put it into a model where you're able to take a decision. It could be a simple example, put it into a pie chart, put it into a bar diagram, how many accounts opened. So roughly you get a macro thought process. You want to go deeper, you have to investigate. So process of inspecting, cleansing, transforming, modeling the data such that you're able to take some sort of a decision and some sort of a conclusion. What you need to keep in mind is also that analytics, many of them think it is complicated software, Excel, data science, all those things. No. See, in a layman's language, you can also possibly call this as computer-assisted audit techniques. It's a collection of tools, techniques, best practices. It gives you that power, or it empowers you to audit this digital data. Sometimes you can also go to the extent of 100% audit, provided you're able to use these CAT tools, etc. Correct? And these are today called as analytics tools. These are popular, data analysis software, etc. etc. So why do I require this data analysis? Identify risks which you are never aware of, unknown risks. See whether there are any early warnings. Are there any warnings which are giving you, at a very early stage? Can I just pick it up and identify? Create profiling of the assets, grouping those assets, bring all the vendor payments of one particular payment amount into one group. From hindsight to foresight, okay, past it happened, in future also will it happen? Perform repeated tests, especially when you have repeated activities, you can use this. And sometimes, you are using the traditional methods, your relevance of audit is coming down, so therefore you may have to use analytics. So what are the analytics tools? I think we already had a look into it. Excel, general software, add-in for Excel or data analytics software. Sometimes separate applications are there, specialized audit software. When it comes to forensics, you have specialized forensic oriented software. Again, each works on its own methods. So let's probably spend the next few minutes, some insights, how you can use these fraud analytics functions, because that's something which I wanted to give you as a take-home message. Let's take a simple scenario. This is a procurement file, which you can just see. Of course, I've anonymized it just to give you a thought process. So a file like this, you get to know. You have a suspicion that, something has gone wrong in procurement. You want to sort of investigate. So you might think, okay, fine, take all the invoices, come verify, bring all the papers. It's not practical. What you can apply is data analytics. And how do you do that? You can pick up cases. For instance, you can identify, are there duplicate POs? You can identify, are vendor names and vendor codes, have they given it for multiple people? Are there cases where vendor bank accounts have been changed without authorization? So a lot of these things you can actually deploy. An example could be identifying duplicate POs. Now I've just used one of these softwares to quickly figure it out. So identify duplicates in a series of data. Just pick up PO and give me this. The software will run it. In an Excel, you can just use remove duplicates or identify duplicates, etc. Next, identify gaps. For example, this PO supposed to have, if you look at it carefully, it has PO/5248. So first three are characters and then you have a number. Is there any sort of a gap? So the number should be consecutive in nature. Is there any gap? So these analytics softwares can quickly, in a click of a button, run this and show, hey, you know what, this is what happened. Correct? So that's where you can use these analytical softwares. Next, a very, very interesting function called relative size factor. Now, relative size factor, what it does, it gives you the variation or the ratio of the first highest and the second highest. Normally, a fraudster or an error, when they are passing the entry number 1 will be extremely high. Entry number 2 will be very, very less. So between that, if the ratio of the first highest and second highest is extremely large, catch hold of it. For example, if you see here, material code, the highest selling price at which I received was 167. The least selling price I received, the second highest, sorry, not the least, the second highest I received was 17. See, it doesn't look possible at all. It doesn't look possible at all. Actually, what could have happened, that fellow might have entered 167 on purpose, or generally when you're entering that keyboard, 6 and 7 are right next to each other when I'm sort of entering it. I'm not talking about the number pad. I'm talking about the laptop 6 and 7. Correct? Because if you enter in the number code, it is 1, 2, 3, 4, 5, 6, 7 is on the other side. So this error is not possible. So this is an addition error, we call it. So that fellow put in an extra. For all you know, it could have been a fraud. Look at that second case, 1106 versus 190. Just for reference, this relative size factor is also there in Tally. I'm not sure whether I have that screenshot over here, but you get a thought process. What is the highest to the lowest? Correct? So you get a thought process. Hey, you know what? This is what has exactly happened. Okay. So this is there in Tally also. For those of you who are not aware, if you go click on this audit and compliance module, you click on audit and analysis. Under that, you have this option called as the relative size factor, a very, very simple but powerful option. Okay, so it's not necessary that you have to use only in fraud investigation. You can use these analytical techniques even in normal audit, just for you to get that additional layer of comfort. Taking this further, you know, it will display something like this, like what you've seen over here. An example is that 75,000 is the highest entry, second highest entry is 5,600. You can see the ratio is about 13.9, so which means it's fairly large. Correct? And maybe that 75,000 could have been at 7,500, accidentally under 75,000, 10 extra, or maybe it was a capex versus opex, or, you know, mischievous entry, etc. etc. Next, a variant of RSF is maximum variance factor. Try to see what is the maximum variance, highest and the next highest. See what is the maximum variance. Sorry, RSF was highest and the next highest. In maximum variance, you look at the highest and the lowest. It's more like a range. Correct? This is also done in Tally. You have to use a different configuration. You'll be able to catch all of it. Another approach could be trend lines. This is there in our own Excel sheet. Just to pick up all the prices and sort them in ascending order and see the trend. This line itself will give you one factor. Look at this. 40 became 31.22, maybe okay, one-off cases. But if you see some cases, 1,106 has become 190. Can you see that trend? 82 has become 24, 24, 24. So wherever you find a sort of a V curve, inverted U curve, wherever there's up and down immediately, those all gives you an indicator. And this is where you can use analytics. And this requires a simple Excel sheet. You just have to sort the entire data in Excel and you just have to apply trend lines. That's as simple as that. You can use pivot, etc. Then there's a very interesting concept called as the Benford's law. Now this Benford law is basically a frequency distribution. Now what Benford, he was a statistician, he said that any number which occurs naturally, should ideally have the number 1 beginning, maximum we can have number 9 ending. That means 1 to 9, 9 digits are possible in the first digit of that particular number. So generally what will happen, how many times do you think number 1 will appear as the first digit in a number series? You will say, sir, simple probability rule. How many numbers are there? 9 digits. What is the digit we are looking at? The first digit, we are looking at 1 digit. So 1 divided by 9, 11.11% probability. But what Benford noted was, he said that is not the case. He said, generally in the law of natural numbers or any naturally occurring numbers, which is not man-made, which is not spoofed, which is not artificial, he said, in those sort of a data set, the number 1 will appear 30+ percentage of times, not 11%, 30%. Number 2 will appear close to about 25 to 28. Like that, he kept on coming, and number 9, it appears least in a particular data set. So he said, they follow this sort of, order whereby we can identify any deviation in this sequence. Let's take an example over here. Any number which begins with 1, almost close to about 30%. Close to about 30%. That's quite high. Number 2 occurs 17% of the time, and likewise it keeps on coming down, and number 9 occurs 4.6%. Now what you do is, if you have a suspected, especially in procurement, there's one popular case. In procurement, you apply this. If you are getting an outlier which says, hey, you know what? There are many transactions which occur with number 5 in contrast with number 1. All those numbers with 5 which are occurring possibly could have a fraud involved. Because whenever a person is passing fraud entry, he will not run it based upon the Benford law test. So it fails. So you can sort of identify, where all you can identify credit card transactions, purchases, loan data, customer balances, journal entries, stock price, if it's manipulated, inventory price, all these places you can apply. Where you cannot apply, wherever the number is fixed, airline passenger counts per plane. You cannot, because the maximum you can have is 100 to 150 or 180 seats. Telephone numbers is follows a predetermined order. Data set with 500 or fewer transactions, very difficult for applying Benford law. Data generated by formulas, this plus that is equal to. Data restricted by maximum number. So all those cases you cannot apply, but this is a good case which you can apply. Let's take an example over here. Digit number 1 as per Benford law is supposed to occur 30.1% of the time, whereas actual in the population it has occurred 13.4%. So what is the variance? 16.7%. Whereas number 3, if you look into it, the variation is about 17%. So that means many of those numbers which is beginning with 1 in the population, or many of the numbers which is beginning with 3 with the population, could have some fraudulent elements. So go ahead and investigate them. Okay, so this gives you a high level approach, because when you are starting a fraud investigation, you do not know from where you have to start. Correct? So that is basically how it works. The other few interesting analysis which you can apply is same, different. A same, different classical example is 2 fields are same, 1 field is different. An example could be, purchase order and, a vendor name and material code is same, but the price is different. Correct? So the same vendor is supplying the same product at different prices. So let's say if you do an investigation, you figured out something like this, and you can say, hey, you know what, maybe in Bangalore it was supplied at a different price, at Chennai it was supplied at different price, etc., etc. So you can see there's the same vendor which you can see on the screen. The material code is same, but the unit price is different. And of course, quantity is differing, but unit price is different and location is different. So this way you will be able to identify interesting patterns. Next is fuzzy match. This happens especially where, systems are, especially in SAP, what happens, the same invoice number or JV you can't enter. So what they do, they put a slash, comma, backslash, forward slash, etc. Fuzzy match can help you catch hold of it. So what it does is, now look at those in this particular transaction description. 93 check printer. Printer check 93 towards. Check number 93 towards printer. So like this permutation combination. So I apply this fuzzy match on this column, whatever you see, and it will sort of identify and give it in a arrange in a sequential order. Then I can get to know these are all duplicates. So fuzzy match is one more interesting, powerful function. And other things could be sound X, sound like, etc. For example, these names are there. You can apply the sound X principle. For example, many times this happens. Same vendor, same name, same person, spelling mistake, modification. All these are possible things which can actually give you interesting information. This is one very interesting case. Diversion of funds. Excel and Tally. Simple. I picked up one current account and one savings bank account. Daily balances. In Tally there is one option, right? Daily closing balance. I took the daily closing balance and put both of them right next to each other and just ran a chart. It gave me exactly opposites on 31st of March, which means what? Fund from there is transferred over here. That's all. Overdraft balance pushed into current account and used into other places. Many companies have seen, especially what they do, they have loan facility with multiple banks. What they do is Because one bank fellow is putting pressure, they will withdraw from one more bank, put it over here. They'll keep on running. And generally the terms of issue for any bank would have been that you cannot do interbank fund transfer beyond a particular percentage, etc. So these are all things which you can quickly catch hold of using Excel and Tally. So what are the broad areas of evaluations you can using analytics? Accounts payable you can look into, privileged access you can look into, vulnerability management, general ledger, travel expenses, payroll, termination, cash accounts. These are all places where you can use fraud analytics, and probably I'll pick up a few cases just for explanation's sake. A payable audit. You do what is called as ABC analysis. You just do a Pareto analysis. Let's say you just take the voucher number, take the highest, lowest, figure it out. Vendor payment relative size factor test. What is the highest payment I've made to the vendor? Second highest payment I've made to the vendor. You get a ratio. If the ratio is beyond a particular percentage, maybe there is some issue there. Next, segregation of duty, maker checker concept. You can use that. Vendor payments without description or duplicate description, etc. Duplicate invoice number payments. You can apply all of these things. So these are few examples when it comes to payable. Next, general ledger. Again, ABC you can use. Narrations are non-standard or same narration used, NEFT, RTGS, to transfer, by cash, to cash, using very this thing. Or very high value round numbers, 10 lakh, 12 lakh, 15 lakh, because what will happen, fraudster will be under pressure. He will not know what number to put, he'll put one round number. Every transaction cannot be a round number, right? So these are all again transactions. Splitting of vouchers, very, very dangerous. I know my limit is 5 lakh rupees. So what I will do, 3,55,000 one entry, another entry 3,55,000. There was a case where one person wanted to purchase a Mercedes or a BMW car, which was priced about 58 lakh or so. And obviously his limit was only 50 lakh. He had to get an approval from foreign or some holding company. So what he did was he simply said, raise 3 purchase order. Basic value of the car, 1 purchase order. Road tax, insurance, 1 purchase order. GST and whatever taxes, 1 more purchase order. And repairs. So he tried to play around splitting of vouchers. Voucher passed on weekends. In Excel, you can just simply put one formula is equal to text. You will get Saturday, Sunday, and you can calculate it. Is equal to text, comma, colon, D. You will get the entire format. You can voucher with blank references or narration. That is also possible. Payroll, one more possible area. Same bank account payments being made. That's a classical example. So all that you have to do is take from the file which is uploaded inside the bank website, bring that statement, identify any duplicates. Easily you'll catch hold of it. Or compare that with the bank master, salary master, you can identify. Payroll deductions, whether these employees are ghost employees, active employees, multiple payments to the same employee. You can do employee-wise trend analysis. How much is the amount net pay which is being paid every month? Then employees who have not taken leave beyond a particular days, duplicate employees, all these things could be examples when it comes to pay. The other thing could be, sorry, I think there is some small formatting issue in this. I'll quickly get that fixed. The other thing which I'm trying to refer over here could be, something relating to your travel expenditure. The travel expenses could be ratio of travel expenses, trying to see whether same employee is going for multiple times travel, fake what is that claim, travel allowance claims. There is that income tax benefit also, right? You get it. So submitting fake documents for the purpose of giving that benefit. There was an interesting case. One person always, whenever he used to claim flight bill, he used to claim a taxi bill. Using data analytics, one person identified that there are 10 claims of which flight bill is there, taxi bill is not there. So they thought, okay, maybe company had sponsored or something. When they went a little more detail and understood that, they figured out that person booked the flight, he canceled the flight, but he still claimed the amount. Correct? So frequent travel validation, weekend traveling, claims beyond X days. Let's say historical, I'm claiming October's claim next year, October, things like that. Correct? Segregation of duties. A lot of these checks can probably be applied. So what is the major action item for you and I? What is it when it comes to fraud? What is it that we can do? There are a lot of potential things. At the end of the day, you need to get started by using something. So there is something called as a fraud detection program which you can draft. And how do you do it? First, you start creating a profile. Overall, understand what the profile is. Then you sort of quantify the risk. How many people can possibly fall under that bucket? Then do some ad hoc testing, trials, oh, whether this works, whether this works. Then extrapolate. Can you repeat that? Can you see multiple areas this occurring? Once that is done, communicate to the concerned management, notify them, focus on the broken links and controls, and keep on repeating this exercise. Now, this charter, what you see, this is something which I've mentioned over here. You can use it in different perspective. Perspective number one, you can use it from the angle of identifying or detecting fraud. Perspective number two, if you are an internal auditor, follow these steps to see whether can you prevent a fraud from occurring from a futuristic basis, or even detecting something which happened and keeping remedial controls, etc. So it's a regular exercise is what I wanted to give you as a message. So what's my key message which I wanted to give it to you? I know it's fairly been a lengthy session, but I hope I was able to deliver the content. But what is the key message I want to do? So invest and experiment in these technologies, only then you will get to know. Adapt and adopt analytics when it comes to even in fraud and other areas. You have to use them. Build awareness, try to get the knowledge, look in and around you. That itself gives good awareness and indicator whenever a forensic audit is going on. Train, develop the skill and the mindset. There's something very critical. You need to keep on informing people, because you alone cannot bring in that. You will have to encourage your entire team to do it. And you cannot look 100% of over there. So you require to develop, bring that mindset, skill set to the people, dedicate resources and time, and do not say that I will stick on to the traditional method. I think you need to move from the tick to the click method. Correct? So that's my key take-home message for you. So I hope I was able to do justice in this particular time. And remember, we're all dealing with larger sets of data. It's all about how much in that data we are able to investigate and identify the actual finding. The other point which you need to keep in mind, it's not about the data what you have, it's about the data which you want. On that note, thank you so much for giving me this opportunity. This is a quick brief about ourselves. We are Kenenco, a small firm based out of Bangalore. We do a lot of things in this particular domain, and that's where I've been able to get some sort of practical insights, whatever I've shared. A lot of technology-based things we've been doing in the past, and that has given me good amount of insights. Thank you so much. Over to the organizers for giving this particular platform, and thank you so much for the organizers, and I hope I gave you a perspective and thought process. Over to you, open for questions.
Thank you, sir. Thank you very much.